Crypto regulations are coming. Are you ready for the coming crypto regulations? That's what we're going to be talking about today in this video. Or better yet, how can you become or how can you be ready for the coming crypto regulations? So that's what we're going to be talking about today in this video. This is Crypto Wealth, ladies and gentlemen. I love cryptocurrency, and if you love cryptocurrency and you believe in this technology, do me a favor and smash that like button. All right, let's go ahead and get started. So Bitcoin has had a bit of a pullback right now. A lot of news about regulations coming out, and there's a lot of misinformation going on right now. There's a bit of misinformation that's coming from the anti-crypto side, and there's a bit of misinformation coming from the pro-crypto side. You see, the anti-crypto side is saying that this is going to be the death of Bitcoin. This is going to be the death of crypto. You know, once this stuff gets banned, it's over with. I think many of you that are here in crypto today, you recognize that it's actually not possible to destroy this technology. It is impossible to destroy this technology. However, they're not wrong in saying that we could see significant price drops. And I'm going to talk about that and some of, how I'm navigating this, what I think is coming. I've been talking about crypto regulations coming and affecting the market now for almost 2 years. And I kind of hate to see it come personally because I feel like it's going to do more bad than good overall. And we'll get into that a little bit later in the video. However, all of a sudden these regulations are coming upon us and they're coming quickly. And the pro-crypto guys are saying, oh no, it's not a big deal. Oh, these regulations are good. Oh, it's nothing new here, nothing to see here. And it's almost like they're trying to protect their bags. Listen, I'm invested in this space. If the market goes down, I lose value. But I want you as a viewer of this channel, I want you to be some of the smartest people in crypto. I want you to at least be able to think objectively about what's going on and make the best decisions for yourself and your family. I believe that this technology, used properly, can literally change the world that we live in today. And I believe that you are one of the people that can help this world change. I believe you can use this technology to be able to help protect your family, help protect your future, and help protect your finances. But in order to do that, you can't get caught up in some of the other people's biased emotions. So you have to sort of kind of ask questions for yourself. So I want to first talk about some of the pro-crypto side and what they're saying. So we got this tweet from Michael Saylor. If you don't know who Michael Saylor is, his company MicroStrategy is investing in Bitcoin really as a form of hedge against what they believe are strong inflationary policies for the US dollar. So his company's investing in crypto, and it's incredible to hear that his company is actually doing that. He's really on the forefront. He's very forward thinking in that respect. However, today he sent out this tweet 3 hours ago. I think trading Bitcoin while reading Twitter is a bad idea. The news that governments expect you to pay your taxes and abide by existing laws should not be driving panic in the marketplace. The mainstream interpretations are almost opposite of the true implications. Well, listen, the problem is what he's saying is he's saying that governments expect you to pay your taxes. That is true. But the way that they're looking to enforce this regulation and the regulations that they're looking to put in place to try to make certain that you pay your taxes are very challenging and could, depending on how they roll out these regulations, could definitely discourage people from getting started in the crypto space. So let's take a look. So I did this video yesterday talking about China bans cryptocurrency and what does that mean? And a lot of people were like, oh no, this is just FUD. This comes around every so often. China always brings this up. But ladies and gentlemen, you have to ask your question, why does China keep bringing this up? And some people say, well, they're doing it because, they want to drop the price so they can buy more. Maybe. I mean, we don't have any evidence or any proof of that I'm aware of. Maybe that's happening, but there is a reason that they keep getting in the news. They keep hopping in the news cycles every bear market talking about banning something. It's not just FUD. It's not just words. They are taking actions. They continue to take actions. Today, there's another news story out. We're going to talk about it in a moment. But even yesterday, that news story, it went far deeper and further than previous news stories talking about what they were going to enforce. Today, this news story came out earlier. Bitcoin tumbles as China issues yet another threat. This is just 3 hours ago. Another warning from China says cryptocurrency prices in the red. Key takeaways: Bitcoin and the rest of the crypto market turned negative today as China's regulatory crackdown surfaced. The country's vice premier and state council have pledged to introduce tighter crypto regulations. The Inner Mongolian province has also announced a whistleblower program for reporting on BTC miners. What? Think about that. They're going to create a whistleblower program for reporting on miners. Now that would be crazy if that came to the US. I mean, that's insane. Bitcoin investors have panicked for a third day. We know that. China issues another warning. Let's talk about this. At 10:10 a.m. So this is different. They've never issued this warning before. So this is brand new. And you have to ask yourself, what are they looking to do? The bottom line is they're looking to stop competition for their own digital yuan. At 10 a.m. Eastern Time Friday, reports that the Chinese vice premier, second to the president, had vowed to curb the mining business in the country, jolted the cryptocurrency market. He hosted a meeting with China's State Council, after which a statement calling for a crackdown was posted on the Chinese government's website. Now, this is important because I don't know if you know this, but China has more Bitcoin miners than anywhere else in the world. Today, in the third consecutive day where the market has seen flash crashes driven by regulatory news, Bitcoin suffered its worst dip since March 2020 on Wednesday. The U.S. Treasury then announced its plans to make crypto users report transactions worth about $10,000 to the IRS. If implemented, the ruling would begin in 2023. There's a couple things here. First of all, so China, one of the things that they're going to do, they're saying, hey, we need to crack down on cryptocurrency, and they go further and they basically create a program in here, a whistleblower program, that if you know someone is operating a mining operation, like if they're dealing drugs or something, if you know someone's operating a mining operation, then they want you to report it to the authorities. I mean, you got to ask yourself, like, what in the world's wrong with a mining operation? Why is that such a big deal? Most people walking around the planet today have no idea how important it is for a country to control their currency. They have to be able to inflate it, stimulate the economy. And inflation is bad. And over time, inflation historically always gets faster and faster, worse and worse. You know, it wasn't until last year that the American government, for the first time ever, passed a tax stimulus bill that was in excess of $1 trillion. Now they've passed several multi-trillion-dollar. So let's talk about this. U.S. Treasury announced its plan to make crypto users report transactions worth $10,000 to the IRS. So this sounds like Michael Saylor said that you already have to do this in a banking situation. So when you go look at this in more detail, Treasury calls for $10,000 Bitcoins to be Bitcoin transfers to be disclosed to the IRS. The U.S. Treasury wants crypto transfers worth $10,000 or more, not just Bitcoin, $10,000 or more to be reported to the Inland Revenue Service. That's internal, ladies and gentlemen, Internal Revenue Service. The U.S. Treasury is proposing tough ruling on cryptocurrency, citing tax evasion risk. First of all, this ain't going to do anything for tax evasions, but it's going to prevent people from using crypto. The U.S. Treasury Department has taken aim at cryptocurrencies. In a report on tax enforcement proposals posted Thursday, the government body said that it wants crypto transactions worth $10,000 or more to be reported to the Internal Revenue Service. The Treasury's update claimed that there are tax evasion risks associated with digital assets. So here's the question. How do they expect you to, so if you go into a DeFi yield farm, are you supposed to suddenly, report that? Or is that decentralized yield farm supposed to report it? How does that work? And what are they going to say? You see, they could possibly write this law in such a way that you and I could not interact with DeFi protocols. You understand that politicians who are getting paid by big finance can write laws any way they want, essentially. And they can write a law that says, hey, if a business entity does not have the ability to file taxes on that income, then you can't send that entity income. I mean, or you can't send that entity Bitcoin, or you can't send them more than $10,000 worth of Bitcoin. So it depends on how this gets written. And then think about this. All of your small yield farms that are centralized in nature, this would require all of them to have tax paperwork on and to do KYC essentially on every single person that made a deposit of worth $10,000 or more. Now, I know some of you are like, well, some DeFi farms are going to still exist. Some people are still going to do that. Very few want to take that risk. Now, maybe you don't see a problem with it, but I see a serious problem with this. And I want to go back to this over here, this China, what China was talking about, because again, I think this is very possible for the U.S. Hopefully it won't be this extreme, but it's very possible. If you come down here, right here, in addition, the HE updated Hong Kong, the Special Administrative Region of China, also reiterated its legislative proposal that will allow only professional traders with a portfolio of over $1.03 million to trade on licensed cryptocurrency exchanges. Ladies and gentlemen, this is going to be relevant here in a minute. I'm going to talk about another story in the U.S., but I've been saying for a while, I thought the U.S. may only allow accredited investors, wealthy investors, a net worth of like $1 million, to be able to trade on the exchanges. This is already the case with things like commodities. This is already the case to be able to participate with like IPOs in the U.S. If you ask me, this is just taking away opportunity from the small middle-class investor in crypto. This is keeping it a game only for the rich, that only the rich get to use to become more wealthy. And they're going to say, oh, cryptocurrency markets are too volatile. This is for your safety. I don't agree with that. Do you agree with that? Let me know down in the comments, please. I would love to hear back from you. Now we get to the U.S. SEC Chair Gensler. And I'm going to talk to you in a moment about how we can navigate this, how we can kind of protect ourselves or make plans for it. And you're not going to be able to, listen, we're not going to change the laws, you and I, but we got to play within the game. But how do we take action now that gives us the best possible advantage in this game that we're going to play that's going to possibly have some new rules? And I'm going to share that with you a little bit towards the end of the video. At least I'm going to share my thoughts on it. So the SEC Chair Gensler says cryptocurrency exchanges need more regulation, asked Congress to weigh in. So he's saying they need more regulation. Well, how do we know that regulation isn't going to be right here? Something along these lines. Only allowing the wealthy investors, people who they say can quote unquote afford the risk. But at the same time, they can afford the risk. They also can afford the opportunity to succeed. They're going to hurt the small investor. That just annoys me. Does that annoy you? Because it frustrates me. I want to tell you, I'm always skeptical of regulations. I'm not saying that regulations couldn't be good, but I think that more often than not, they hurt the small investor. That the people writing the regulations are put into power, put into office by people who spend a lot of money getting them into office. How many people did you donate to their political campaign last year? How many meetings with politicians have you had discussing your viewpoints and letting them know that you were open to giving a donation to their campaign, but you wanted to make certain that they understood your viewpoints? That's called lobbying Congress. How many of you have ever lobbied Congress? Well, I promise you, big finance is lobbying Congress. The wealthy is lobbying Congress. They're not lobbying them on your behalf. It's their money they're spending. And I don't have a problem with people spending money. I have a problem with people getting political favors. I don't have a problem with people making money. I have a problem with people making money because of political favors. Let's look at this for a moment. The SEC chairman pushes for more crypto regulations, and people said this Gary Gensler, he understands blockchain. He's going to be good. People were like, oh, Joe Biden's going into office. He's got, Gary Gensler. He's going to be good. And I said, ladies and gentlemen, you got to be skeptical. Who's putting these people in power? Robert Kiyosaki talks about who writes the laws. The wealthy business owners of the world writes the laws. The wealthy lawyers of the world writes the laws. You just have to be aware of that. The SEC chairman Gary Gensler talked about cryptocurrency regulation on Thursday at a Financial Industry Regulation Authority conference, FINRA. FINRA is a government-backed authorization not-for-profit organization that oversees U.S. broker-dealers. They might be not-for-profit, but who do you think pays their bills? It's not the mere peasants, that's for sure. The SEC, we are focused on going after misconduct wherever we find it in the financial system. Gensler began. That means holding individuals and companies accountable without fear or favor across the approximately $100 trillion capital markets we oversee. On the topic of cryptocurrency regulations, the new SEC chairman highlighted the need for more investor protection. Ladies and gentlemen, they always write laws that restrict your abilities by calling it protecting you. It's always about your protection. He emphasized that he would like to see more regulation around cryptocurrency exchanges, including those that solely trade Bitcoin and are not currently required to register with the SEC, he asserted. This is bad for a lot of reasons. If they put in more regulations, it's going to be expensive for smaller, newer crypto exchanges to compete. Some of the small exchanges are the ones that many of you like because they're the ones that will list smaller cryptos, small cap cryptos first, ones that you want to be able to invest in. But if regulations are expensive to comply with, it requires lawyers and accountants to make certain that you're following the laws. That gets very expensive to set up a new business. I don't think that's good for you and I in a lot of ways. Also, if you look at in the U.S., just look at Binance.com versus Binance.us. Binance.com has probably 5 to 6 to 10 times more different cryptocurrencies that you can purchase. Binance.us is restrictive and people get upset. Binance.us requires KYC and AML. They don't have everything I want. You can't blame Binance for that. That's the American government. That's regulations that are designed, according to them, to protect you. I think it's designed to limit our opportunity personally. Gensler explained that there is no authority to register and write rules to protect the investing public. When it comes to crypto exchanges, reiterating that the investing public would benefit from more regulation in this area. The SEC chairman also revealed that he has asked Congress to consider the issue. He also clarified that crypto tokens that are issued in the same way as traditional investment tokens fall under the SEC's jurisdiction, noting that the agency has taken around 6 dozen enforcement actions against those offering unregistered securities. And there are hundreds of tokens out there, so we'll continue through examination and enforcement doing what we can in that space, he opined. According to independent research, the SEC has brought about 75 enforcement actions on the crypto industry so far. In addition, Gensler, by the way, if you want to see how bad this is, I got a video talking about them coming after one token in particular, the LBC token. It is so unbelievable. The LBC token has done everything that they can do. I'll put that video above if I can remember to do it. They've done everything that they can to abide by the law. And then suddenly they got an SEC complaint. Without warning, I mean, they reached out to the SEC before they started the business and said, hey, can you give us guidelines to make certain that we're compliant? And they still got in trouble. Right now, they're under investigation, right this very second. In addition, Gensler stressed that the need for the SEC to update its rules around cryptocurrency marketing and how it is being used, get this, including through game-like features on mobile applications offered by retail brokerages, robo-advisors, and wealth management firms. So if you ever notice on Binance.com, in fact, let's go look at it. You ever wondered why Binance.us looks so plain compared to Binance.com? Notice how they got like all these promotions taking place, you know, all these different types of contests, but you come over here, Binance.us is so plain. Why is that? I mean, this looks like a lot more fun, a lot more interesting. What's going on here? We just saw it. Binance knows that the U.S. government doesn't like all those promotions, quote unquote, game-like features. Basically, they don't like yield farming. They don't like any sort of trading competitions. They don't like any of that. Why? Why should, I mean, what in the world are they doing? Anyway, again, they're taking opportunity away from us. The rest of the world gets access to that. We need to do whatever we can to ensure that bad actors aren't playing with working family savings and that the rules are enforced aggressively and consistently. Again, this is manipulation. Working family savings. First of all, who gets to determine what a working family can spend their money on? They don't stop you from going to the casino if you want to go to the casino. You know why? Because those casinos are run by very powerful people who pay lobbyists. Anyway, look at the phrasing of this question. This is manipulation. Individual accountability is an important part of any enforcement agenda. I believe we should continue to pursue bars and similar relief where appropriate to protect the public. So here we go. Individual accountability is important, but we should pursue bars, in other words, banning people from being here to protect the public. It's an individual accountability, but it's our job to protect the individuals. No, it takes individual accountability. If you don't want to be accountable for your own decisions, you're only going to be able to invest in what the government says you can invest in. Listen, go after crimes if you want to. Go after Ponzi schemes if you want to. But these regulations, I'm concerned that they could go too far. Let me just know what your thoughts are down below. We're still dealing with this rule. This is not finished up yet. This happened the end of last year and it's still ongoing. The U.S. floated long-dreaded plan to make crypto exchanges identify personal wallets. Ladies and gentlemen, this is catastrophic for cryptocurrency in the U.S. Right now, Binance.us does KYC. But if you set up KYC, they just want to know what your identity is and your ability to log in. If you send crypto from your personal wallet, they don't necessarily know that that's your wallet. You could have just withdrawn from another wallet. You could have had someone else send crypto from their wallet to your wallet on the exchange. And Binance has no way of knowing which is your wallet and which is, your friend's wallet who sent you money to the exchange, or which decentralized application sent money to the exchange on your behalf. But this is saying that the U.S. wants exchanges to be responsible to identify every single personal wallet that interacts on the exchange. This rule is crazy. And if you go to this rule deep enough, it goes as far as to require you to have KYC AML on someone else who sends you crypto. Like that as ridiculous as that sound, that I don't think that's going to pass. I don't think that rule is going to get through. But literally that was floated. And you got to ask yourself, why are they trying to be so restrictive? What are they scared of? Ladies and gentlemen, if you don't understand the relationship of the U.S. dollar, these countries need to figure out how to protect their currency. That's what they're trying to figure out. How can they protect it? How can they marginalize this technology? How can they prevent the masses from getting access to this technology? But there's a bit of a caveat. There are some financial institutions in this space now, and those institutions want to be able to play. And a lot of individual investors are like, well, the institutions are here. Nothing's going to happen to crypto. It's not necessarily true. They can allow the institutions to play, but keep you out of it. Again, all they got to do is create a rule where only accredited investors can buy crypto. I want to talk about sort of where you can go from here and what my thoughts are on navigating this. First and foremost, there's several things you need to be aware of. Pay your taxes. I know that's not popular to say, but just pay your taxes. You would rather pay your taxes now than be going back later because you're under threat by the IRS. So I encourage you to pay your taxes, do your part to obey the laws. This is not the time to lead an economic freedom revolution. That time may come at some point in the future. And at that point in the future, you can take whatever decisions you want to create all the brand new wallets you want and use all the secrecy and privacy that you want to avoid whatever you want. That will be your decision. We'll be living in a different world by then. And the great news is this technology will exist to allow people to do that. But today's not today to put your family, your welfare, or your emotional health at risk because you're trying to avoid paying taxes on a few $10,000. Pay your taxes, pay them now. And you're going to get more grace right now, even if you haven't paid back taxes, because all the rules aren't really defined super clear. I do have on my channel, I do have a video where I talk about paying crypto taxes. Here's that video, how to do taxes for crypto taxes done in minutes. It's super easy. I'll put a link above. I'll put a link in the description. You can watch this video. It makes filing your taxes very, very easy. You can use a free software that can look at everything and kind of tell you sort of, what you're going to owe. It's totally free. You don't pay unless you print off the paperwork to actually do your taxes. But I recommend you use the software to at least follow your wallets to see how much money you've earned, that sort of thing. Get some idea of what you're going to owe for taxes. But I'll link this video down below. You can watch it. It's a pretty short video. I don't even think it's 10 minutes long. The second thing that I would tell you is if you're close, like a credit investor has like $1 million net worth, I believe, and they have like, an annual income of like $250,000 or whatever. Now, most of you watching this video, you don't fall in that category, but some of you are kind of close. Some of you have made some spectacular gains in crypto, and you're very close, or maybe you've already crossed that mark. I'm going to tell you something unpopular. That is, don't be afraid to take some profits, because those profits, it's not just about protecting you against, it's not about taking profits just to protect you from losing USD value if the market pulls back much more. It's really about taking profits so that you can preserve that status of being an accredited investor. You want to do everything you can to be an accredited investor, because I promise you, if there's a class of people that's going to be protected, it's going to be the class of people that fall into that accredited investor category. Also, if you're going to be in crypto, I like to look at things that create passive income in up markets and down markets. Inside of our newsletter, right here, the Crypto Passive Profits newsletter, I talk about several strategies that you can, earn passive income in crypto. Anybody can do it. They're super simple. I will tell you, look at projects like I have the mogul mining method, projects like that pay dividends based on businesses. Those do well in good economies, bad economies. Here's the challenge. So we may see tokenized gaming, the same type of thing I talk about mogul mining method. We may see that come under scrutiny later. We may see yield farming. I bet we can almost predict that yield farming is going to come under scrutiny. Why? There's too many rug pulls. They're going to say it's easy to go after it because somebody's lost money. They're whining and complaining. They're getting upset and they want the government to fix it for them. And that's just what humans do. And so it's going to be an easy thing for the government to go after. Plus, they pay out dividends. So, I mean, at the very least, they can prevent the small investors from participating and leave stuff like that available for the big investors. Who knows? One day we may see some sort of huge company running their own version of a yield farm. I don't want to say be careful, but just recognize that some of those passive income strategies could become under scrutiny. Anything that pays dividends. I like certain types of dividends I think are better than others. Like I think the dividends that you can earn from like the 1-inch token, for example, are probably going to be better than dividends that you can earn from the yield farms. Yield farms are always short term. In best case scenario, they're going to last for a few months. But something like the 1-inch token, if you stake it, which I'm not holding any right now, but if you stake it on the 1-inch platform, you earn a percentage of the referral fees that exist. I think that return, in my personal opinion, not financial advice, not legal advice, but I think in my personal opinion, that may be less likely to get regulated, but they could still call it a dividend, and at some point it could get regulated. So you've got to be looking, if you're trying to earn passive income in crypto, and the reason I say earn passive income in crypto is because it could be challenging in the future to be able to get crypto on and off of exchanges, on and off of the crypto space, meaning take your dollars and buy crypto. That could be challenging. So you want to be able to earn passive income from as many different places, as many different sources as possible. Go down in the description, subscribe to our Crypto Passive Profits newsletter. I believe in passive income, not just these 5 streams, but I'll be able to email you. I believe in passive income. So this is something that I talk about. It's something that I'm very passionate about. Right at this very moment, if you haven't seen any of my videos lately, you may not have heard this, but I've been doing some trading. Now, there's a reason. In the past, I've talked about what I didn't like about trading and traders, and I'm not going to go down that path. A lot of the way trading is done traditionally, I don't like it. However, I've been working on a trade strategy that works, that fits within my parameters, and that is it has to be very passive and of course profitable. I haven't had a losing day since I've been doing this. I'm coming up on 2 months of using this exact strategy. I have not had a single loss. We had this huge dip. I did incredibly well in the dip. We go up, I do incredibly well. It seems to work in sideways markets. It works in up markets, down markets. I'll be talking about it more later on the channel. Subscribe to our newsletter down below. I'll definitely be talking about it there first. If you want a heads up, go there, get subscribed. The thing about trading is there may be some regulations to exchanges, but the last thing that I think we'll be able to do is to be able to buy and sell on an exchange. I believe that, I mean, if we get to the point that we can't buy and sell on any sort of centralized exchange, then if that's the case, then we got much bigger fish to fry. That is going to be crazy restrictive. Of all the passive strategies, trading, being able to set up automated trade setups that can work with you or without you around the clock 24/7, in my opinion, that's maybe one of the last sort of areas that we can be able to earn a good passive income. You know, when I say good, I mean, you know, more than 6% a year, being able to make, you know, 50% a year, 100% a year, 30% a year, depending on the volatility of cryptocurrency. I think you need to obey the law, do everything you can. If you're close, there's 3 things. Obey the law when it comes to paying your taxes. Go ahead and pay your taxes now. The second thing, and I've got the video, go watch the video. It's super easy now to pay your taxes in crypto. The second thing is, if you're close to that credit investor, if you've made some gains, lock in those gains. It's going to be extremely important that you're able to maintain that accredited investor status. The third thing is start creating passive income in cryptocurrency. You have to. If it ever gets to the place, this is how it is right now in the poker industry. It is very difficult to find a way to get US dollars onto a poker site. In fact, the only way to do it right now that I'm aware of in the US is to buy Bitcoin and send them Bitcoin. You can't use a gift card. You can't use a debit card. You can't wire money there because they made a rule. It's not illegal for citizens to play on online poker in most states, but there's a federal law that is illegal for the financial institutions to facilitate helping you deposit money on the poker websites. That means that the poker market has shrunk by more than 90% in the US. And we may see, let me give you a price prediction here on crypto, on Bitcoin particularly. If we have regulations that end up that strict, pay attention to these regulations, ladies and gentlemen. And I know I'm pro Bitcoin, I'm pro crypto, I'm supposed to be telling you everything's going to be okay. Listen, I'm not here just to pump my bags. I want us as people, as humans, to be better. It's only because all of us coming together ultimately with a common understanding that we're going to be able to guide ourselves forward. For me personally, just if these regulations come out and they're this strict, I think we can see Bitcoin go below 10,000. And if they're strict enough, if they're strict, worst case scenario is difficult to get crypto on an exchange because they don't allow the financial institutions to send, wire money any longer. They don't allow Coinbase to receive transfers from U.S. citizens, or they don't allow it from non-accredited investors, then I believe we might see Bitcoin go even lower than $10,000 per Bitcoin. Well, it may go below $5,000 per Bitcoin. But now here's the flip side. If they come out with regulations that are not that restrictive, and they at least they don't come out with them right away. I do think eventually they're going to come out with very strict regulations. But if they don't come out with very strict regulations right away, we may move sideways for a moment, but we could potentially break $100,000 still by the end of the year. If it just comes down to the government regulations. That is the wild card. I literally, if the government stayed out of the way, I don't think there's anything that would stop Bitcoin from going to $100,000. I don't care what people like Peter Schiff says, and I like Peter Schiff as far as his view on economics, but I disagree with him wholeheartedly on his view of cryptocurrency. I don't care what people like Peter Schiff says. I don't care what the news media says. I don't care how upset people get. I believe that Bitcoin would go to $100,000 or more by December of this year, as long as government regulations don't get involved. And that's what we have to pay attention to, ladies and gentlemen. How is the regulations going to regulate us and our opportunities in this space? I would love to hear your thoughts down in the comments. Ladies and gentlemen, we're in this together. Hopefully you're following my channel. Smash that subscribe button. I love cryptocurrency. I believe cryptocurrency is the future. If you believe cryptocurrency is the future of our economic and technological systems, do me a favor and smash that like button. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.